let me tell you something, guys. At the end of the day, it doesn't matter. It doesn't matter who's sitting in the White House. What matters is, how are you responding to it? Are you taking advantage of it, or are you a victim of it? I determined a long time ago that I was not going to be a victim of anything. I don't know about you guys, but I got laid off twice when I was a very young man. And what's that old Irish saying? Fool me once, shame on you. Fool me twice, shame on the shamer. No, shame on me. If you know that there's a possibility that the economy is going to move against you, do you wait for the other shoe to fall? Or do you start dealing with it now? The election's in November. The inauguration's in January 2017. Whatever policies go into effect don't even start to happen until October 2017. What are you going to do between now and October 2017 if that should happen? Are you going to wait till November? Or are you going to start making some moves now to be in a position that you're like, I don't care? Now, maybe you may care politically. That's your business. I'm talking about financially. I'm talking about protecting what you got. I'm talking about preserving what you got for yourself, your family, your kids. Are you going to take advantage of this real estate market that we have in front of us right now? Or are you going to wait for something to happen to you, and then you're in crisis mode, and you're like, Sherman, I got laid off. I got to make $11 million tomorrow. Don't do that. See what's coming down the road and take control and use the resources, use the material, use the stuff we're giving you. I'm not trying to scare anybody. I'm just saying, this is what the future could look like. Are you ready for it? Because there's a whole lot of people out in this country outside this beltway, and they're angry. And they want to throw the bums out. And they're saying they want to throw Obama out, but you want to know what they're really saying? Anybody who's establishment got to go. The two front runners right now are anti-establishment. Let's shut the thing down and let it burn. Isn't that what Ted Cruz said last year when he shut down the government? Let it burn. But I got to go to work. I got to get a paycheck. So what? Let it burn. And guess what? That is the majority sentiment in the United States of America today. They're mad. And they're not going to take it anymore. And maybe they're going to take over some reservation out in Oregon. Or maybe they too are going to vote. I don't care who you vote for. I'm not trying to tell you who to vote for. That's your business. Don't ask me who I'm going to vote for. We are pleased to support Donald Trump, our friend and client, in his pursuit of the highest office in the land. My question to you is, how are you going to get ready? No matter what happens. If your best case scenario comes true, don't worry about it. You're just that much wealthier. You're just that much closer to quitting your job. But if your worst case scenario comes true, guess what happens? Now you're scrambling. Now you're trying to play catch up. Now the marketplace could potentially shift against you. I'm just saying. By the way, I hope you guys understand, interest rates spiked. Interest rates spiked when they shut down the federal government 3 years ago. Because money said, we don't understand all this nonsense that's going on inside the Beltway, but we don't like it. Money doesn't have feet, but money has wings. Money knows how to fly in, and money knows how to fly out. The money situation right now for us as investors is great, but it may not be that way in 9-10 months. Don't wait for the market to move against you. So what's still the best investor market for us? At the end of the day, and again, I apologize because you can't see it's too light, These are the major locations, the major cities that we collect data on in the greater Washington region. If you can't see it, it says Falls Church, Virginia. The average price of a house in Falls Church, Virginia at the end of 2015, $747,000, which is up 31%. Arlington County, 585, Washington, D.C., 504, Alexandria, 458, Fairfax County, 445, Fairfax City, 445, Fairfax County, 444. On average, so this is the combination of all of them, 375. Look who's below the line. And then look who's way below the line. Montgomery County is below the line. But I thought rich people in Montgomery County. There are some wealthy people in Montgomery County. By the way, I was on the radio last week. What's the wealthiest state in the nation? What's the wealthiest state? Maryland. Maryland smoked Virginia. There are more millionaires per capita right here in this state than anywhere else in the country. More. I know you're mad at me now. You want to know why you're mad at me? Because I told you and you were in the room when you heard it. And when you start coming to me saying, hey, I can't find no money, I'll be like, what happened to all the Maryland millionaires? It's not that it's not there. You just need to have somebody show you how to go get it. I digress, forgive me. In any event, Montgomery County average value of the house, $360,000, which is down 2.8%. Prince George's County, where we are right now. Y'all know we're in Prince George's County, right? $241,000. Average price. Average price. Meaning there's still deals out there for less than $242,000. I told you about a condo last year for a $142,000. It cash flows like a charm. Well, it doesn't technically cash flow like a charm because my son technically doesn't pay. And his two buddies who were supposed to move in with him, y'all remember that commercial? What happened was, but the peace of mind knowing he's living in a decent place and not coming in and out of the house at 2, 3, 4 o'clock, that's worth it. Go. Now, here's the measurement that I typically use. I don't care so much that houses in Prince George's County are far below, right? What I look at is the historical trend. Historically, and I apologize because you can't see this little note, but here's what it says. It says right now, housing prices in Prince George's County at 241 are 35% below the rest of the region. Normally it's 30%. What should that mean to us as investors? If it's now 35% below what it normally is and it's only 30%. It means it's not time to get scared yet about Prince George's getting overheated. Prince George's County is always historically below the rest of the region. This is the affordable housing market for the DC region. When people get priced out of Montgomery County, Fairfax County, DC, the first place they run to is Prince George's. And if they can't afford Prince George's, they keep moving. Baltimore, St. Mary's. Okay? This is the affordable market. Not the low end, but some low end, but moderate. Worker housing. Historically, we're 30% below. Right now, we're 35% low. But guess what? In 2013, 2 years ago, we were 50%. And I said, you guys should be buying all the Prince George's houses you get your hands on. Because the prices are definitely going to go up. If nothing else, to go from 50% back to the historic 30%. I mean, I know for some people that are hearing this for the first time, you're like, that's overwhelming, but it's really not. If McDonald's normally sells a hamburger for $1.50, and they're selling hamburgers tomorrow for 50 cents, is that a good deal? Of course it is. Because at some point in time, they're going to put that price back up near $1.50. That's what that says. So here's the deal. Last year, 2014, Prince George's County prices were 40% below. So what's happening? Prince George's is closing the gap. I think this is the year that Prince George's might actually catch up to the rest and go back to its historical 30%. which means there's a lot of upside, and the time to be buying is when? Let me say it again. The time now to be buying houses in Prince George is now is when? Now. Thank you.